Hey, thanks for joining me today on Discovering My Dividends. And I'm talking strategy today. And what strategy am I using to get from $0 to $1 million? Well, I've kind of come up with my own strategy, so I'm deciding to share it. And I'm not an advisor, so this is not advice, but simply just to go along with my $1 million challenge to go from $0 to a million, only using $50 a month. I had to come up with kind of a strategy. So when I first started out, of course, I was drawn to day trading. Quickly realized that A, I wasn't a day trader. B, that day trading took way more time than I had available. And I didn't have the time to even do the background research. So even after hours, to do the research that day traders did, well, that didn't work. So I researched stocks that would work for me. So I quickly realized, though, that I didn't have kind of the fortitude or the mental patience to sit and hold a stock, like Warren Buffett would. And I don't have the detailed information to say I'm confident enough to say I can hold a stock for 20 years. Um, so I kind of still went back to that day trading thing, and it kind of kept me focused on what I was doing. So I had to find stocks that I felt comfortable holding if I had to hold for, medium kind of period of time, like a year or two, hopefully less. But I also wanted to be kind of in the game, so to speak. So one of my strategies became I'm only going to look for a 1% gain. A reason the 1% gain is I got that quick gratification, that I guess, that hit, that excitement that you might be looking for if you're getting into like a day trading mentality when you first start, even though you're not a day trader. Day traders would never go for 1% based on basically anything that I've come across for information. They're going for like a 30, 40, even higher percentage gain, and they're looking at stocks that aren't necessarily what I would consider more safe. So I'm, you know, basically in my previous video said never selling for a loss. And the best way to do that is just try and get small incremental gains. Well, if there's 200 trading days in a year, give or take, and I make 1% a day, well, I could make 200% in a year. Now, that hasn't happened yet, but I have made several trades, up to 20 trades in a day with the same money. Now, I don't have a lot of money, so when I started doing this, it was just like $10 and $20, so I'm buying in and out. So it's a lot easier to do when you have smaller amounts of money, or at least I think it is, because I've never had like $100,000 to trade, not yet. But um, once I've developed my strategy here, I quickly realized that the 1% gains were getting me something, and they were increasing my cash flow for one, which meant I could buy and sell more. Um, but it was a lot quicker and safer than doing something else. So I could also trade stocks that were those aristocrat stocks, the ones that didn't have the huge fluctuation, the ones that people want to hold for a long period of time. They're kind of a snooze if you're holding them over like 10 years, and you just kind of put money into them, put money into them, they keep paying you a dividend. But they do have those fluctuations. So when they go down and they go up, and you kind of have those little ups and downs on a day or a week kind of basis, then you can really kind of get in there and get your safety with your gains. Now, you might be able to buy and sell some of them 2, 3 times in a day, but realistically, with the amount of time I have, I'm looking at a 1% gain, because I can really confidently go out and buy something that's had a dip and know that it's going to probably turn around in the next, few hours, next few days, even the next few weeks. And if I'm choosing my stocks in the right way, that 1% gain does end up coming around fairly quickly. Now, there's all kinds of things in the market that can happen. Like, all the experts are following all the different things that are going on with of course, um, tariffs, um, all the different wars that are happening, all the different socioeconomical stats that come out. So they sit and they wait on those, and then of course when something happens, they make their adjustments, and markets go up and down based on what kind of news came out and what they predict that news is going to do. So as a kind of a layman, I don't really follow that as closely, and I got to admit that when I do follow it, I'm somewhat confused anyway, because the stocks that I think are going to go a certain direction or follow the herd, so to speak, they don't. They do their own thing. So sometimes I'll buy stocks and the market's saying, oh, everything's going to go up, and my stocks go down. And I'm like, oh, that wasn't really what was predicted. So I kind of have to do my own thing and say, well, the stocks I have are in this trend, and once they hit a certain point, I can buy them. I believe that the trend that they follow, I'm going to get a quick turnaround or a bounce, and therefore I'm going to do that. So I kind of follow my own trend, keeping an eye on what's going on externally, but I just want that small gain. So when I see a drop and I feel like there's going to be a bounce with that company or that stock that I'm buying, and I just take my 1% and I go. Now I do have a little caveat where the strategy, I might stretch out and try and get 2, 3, 4, even 5%, depending on the scenario. But I'm at a point right now where my base of what my strategy is just about the 1% gain. So that's a really big thing. And I think for anybody who's new, this is an important thing, especially if you get into trading stocks, like with kind of that excitement of wanting to have the trade, right? You want to have that hit, that excitement, whether that's maybe not what you're seeking directly, but we all want to feel like we're interactive and a part of it. Unless you're totally about safety, you kind of want that little bit of, satisfaction to know you got that gain. So when I take that 1% thing, it is just you get to sell, right? And then you get the gain. And now for tax purposes, not as good, because when you don't sell, you don't pay tax until you sell. So you're going to pay taxes on it. But things, you gain more confidence, you gain more understanding. So I'm constantly following my stocks, not as deeply as, say, Warren Buffett would, but I'm constantly following my stocks, and I'm constantly interacting with the markets. And that way I'm paying attention to what's going on, and I'm also learning about how my stocks are interacting with the market. So I have a whole list of stocks that I've kind of pre-approved for myself. Sometimes I dip outside of that, but for the most part, I go with the ones that I do. I have a kind of a quick check, things that I prioritize if I haven't looked at a stock in a long period of time. But in general, the stocks I've picked all have dividends. They pay out for a long period of time. They're more of a blue chip type stock. Some are outside the blue chip, but they have other aspects that I like, and I feel like they fall inside my parameters. So then that 1% is achievable, but it's also something I think that can happen quickly. So that's kind of my whole theory about the 1% gain and why I use it, and really kind of fits into my never sell for a loss thing, because I'm not trying to get exorbitant huge gains. I'm also using it to buy stocks that are relatively safe, as you might say. And yeah, so far it's worked out well for me. And I have to say that when I follow those rules that I have set up and I go for the 1%, I don't have to worry about trying to, you know, sell a stock below. So I haven't had to sell for a loss, just because following the rules tends to work out for me. I do use Wealthsimple. So if you're in Canada and you're looking for a new broker, no fees. I don't pay fees on what I do. Check out, they do have fees for some things. So if you use my link, make sure you know that Wealthsimple is right for you. But that link helps us out because we both get a reward. And, secondly, subscribe and like, follow along, see how I'm doing. My $1 million challenge is off to a booming start this year. We'll see you for the next video.